Good morning, viewers. It's Wednesday morning, January 15, 2025, and I'm your host, Sunil Thakker of Sunny Talks Money. Welcome to ST Money's Business News. We provide you the latest and updated 5-minute summarized US market wrap. But before we roll on, please do subscribe, share, and like this video. Thank you. Now, let's roll. The S&P 500 and Dow Jones edged higher while Nasdaq dipped after a volatile session on Tuesday as investors gauged inflation data and braced for quarterly earnings report to justify stock valuations and the strength of the US economy. Stocks oscillated between gains and losses throughout the day. Equities received an initial lift from a Labor Department report that showed the producer price index rose less than expected in December, although the report failed to materially affect expectations about Federal Reserve's likely path of monetary policy this year. Investors eagerly await Wednesday's consumer price index reading, which will further shape expectations for inflation and the Fed. The Nasdaq Composite fell for the fifth straight session on Tuesday, dragged lower by continued weakness in technology shares. In a choppy session, the Nasdaq flirted with gains but ultimately fell 0.23% to 19,044. The S&P 500 rose 0.11% or just 7 points to 5,842, while the Dow Jones Industrial Average gained 0.52% or roughly 221 points to close at 42,580. Viewed as richly priced by many analysts, tech shares have taken a hit from a surge in bond yields, which has increased the risk free return that investors can get by holding US Treasuries to maturity. Hence, large tech stocks fell again, with Nvidia dropping 1.1% and Apple declining 0.5%. Shares of both companies are down to start the year after logging big gains in 2024. Healthcare was among the worst performing of the 11 major S&P sectors, down 0.94%, as Eli Lilly stumbled 6.59% after its warning that sales of its diabetes and anti-obesity drugs were growing slower than expected. Boeing shed 2.08% after the plane maker's annual deliveries dropped in 2024 to their lowest level since the pandemic. KB Home climbed 4.8% after the home builder posted better than expected quarterly revenue and profit. Goldman Sachs shares gained 1.52% ahead of its earnings results scheduled for Wednesday. Treasury yields, which move in the opposite direction of bond prices, initially dropped on Tuesday after the Labor Department said producer prices rose a less than expected 0.2% in December. That move quickly faded, but yields still ended slightly lower on the session. The yield on the benchmark 10-year US Treasury note settled at 4.787%, down from 4.802% on Monday, its highest closing level since October 2023. In currencies, the Bloomberg Dollar Spot Index fell 0.4%. Oil prices stabilized after 3 days of gains that pushed crude markets to the highest level since August. US crude fell 1.7% to $77.50 a barrel. Spot gold rose 0.5% to $2,676 an ounce. In cryptocurrencies, Bitcoin rose 2.5% to $96,500. All eyes are now on Wednesday's CPI report, which may be the most important inflation reading in recent memory, as it will fuel the market's Fed obsessed sentiment. Also, quarterly earnings get underway on Wednesday with results from a slew of big banks, namely Citigroup, JP Morgan, Goldman Sachs, Bank of New York Mellon, Wells Fargo, and BlackRock, which are expected to post stronger profits fueled by robust deal making and trading. So watch out for a huge Wednesday. That's it from me for today, folks. I will see you again tomorrow morning. Happy investing, stay inspired, and remember, it is all about Money.